Hello everyone, it is Saturday morning, it is 10 o'clock in Chicago. Time for the Macro Cafe episode 20, where we take a look at the large asset classes. Do we buy, do we sell, see what has happened this week, what's about to happen next week, and just dive into all these counts and issues that we have in front of us. I am your host, the Cowboy. This is Elliott Wave Cafe. Let's get started. All right, so lots to talk about. I have a bunch of slides prepared for you once again. We're going to go ahead and cover the main questions. Has the rally finished? The S&P 500, the NASDAQ, the Dow Jones, they all kind of pull back here towards the end of the week. They've been rallying pretty well into the 200-day moving average, so we're going to take a look at that. Do we grow or do we value? A quick look at the growth versus value rotations and what's interesting up in there. We're going to take a look at the crypto sell-off. Then I'm really interested in what Peter Schiff has to say about Bitcoin, and he's been posting some interesting charts out there, and I want to kind of go through those. Then we're going to take a look at the shiny roadmap of gold. Dollar does not give up, continues to climb pretty strongly with the euro dollar selling off, so that's something definitely that we need to discuss. Then what's more interesting, the oil or the natural gas, especially with the crisis in Europe. And then we're going to finish up with 3 charts that you got to see. Definitely stay around for these because they're very, very cool. So let's go ahead and keep going, guys. Before I do, you can find me on Twitter, Elliott Wave Cafe, up in here. That's the name. And then I got 765 followers. Let's try to bump that number higher. Interesting charts, interesting discussions up there. Thanks for everybody that follows me up on there. And you can give that a try. Also, you can find me here at t.me/Elliott Cafe_bot. This is the private trading room that I run where we cover all the macro assets, Bitcoin, altcoins, daily videos, daily charts, trade alerts, everything under the sun you can find in there. So give us a try. All right, let's jump and start with has this rally kind of finished up? So what I have in here is I have a slide that tries to cover all the main markets. I'm looking at the S&P 500 up at the top, Dow Jones Industrial. I'm looking at the NASDAQ Composite and at Russell 2000. So you can see since the June 17 lows, we have been enjoying a pretty nice rally, and it looks impulsive. It does have a pretty good motive structure. If you start from the lows here, you can see you can have that 1, 2, larger 3. So maybe there is a fourth wave forming in here, and we're going to get to that in a second. But what's interesting to notice is the fact that all of these averages have stopped at, above, or near that 200-day moving average, which is an important indicator for trend. It's watched by everyone under the sun in here, and you can see how the S&P 500 reacted out of it. Dow Jones climbed above it and now comes back and provides a little bit of a support in there. NASDAQ Composite did not really climb back above it, so we got a little bit of a rejection, and then Russell also climbed back above it, and now it's back below. So definitely an important point of decision in the market. I think the climb back above it will reinforce the fact that we could be in a finished sequence in here, and we're ready to begin the next bull market in equities. About 90%, more than 90% of the stocks are above their 50-day moving average, but only about 45% or so, 40% or so, they're above their 200-day moving average. So we need a lot more stocks to start to climb higher, just to have a larger breadth in this market. So definitely big decision points that are happening right at the moment. But I'm thinking that the best approach at the moment is to consider, since this has the look of an impulsive move, is to consider whatever happens now or shortly from now, just a kind of fourth wave consolidation. If we're going to get a 5-wave move higher, that's an indication that a lot of these markets are going to be ready to continue to rally. What I'm watching is I'm watching this swing high, this major swing high that was back in April in all these markets. I want those levels to start to get taken out. If they do, that's going to be a trigger for me that we're ready to move to new all-time highs. So the next chart in here, I wanted to show you a couple of interesting things regarding the moving averages. And we're taking a look at the 1 week in the S&P 500, and this is since about January 2001, and you can see how important the 200 week is in providing trend and the large bull markets that we have. So we have a secular bull market, we got some cyclical bear markets along the way, and every time you drop below the 200 week, you know, on the way back it offers some kind of a resistance, and then the market spend quite a little bit of time trying to fight and recover from whatever low levels they get to try to climb back above the 200 week moving average. So the reason why I'm showing you this, it's because you know, you can see kind of what the trend is, and it continues to push higher, and we got rejected, you know, not far above this moving average. But now you'll see a lot of people posting this, the fact that we're getting rejected at the 200-day moving average, right? And every time that happens, or the people are going to show you examples from let's say 2001 and 2008, where you had a rally into the 200-day and then a crash lower. But there's, for as many examples as you have of a rejection, you have examples of you know, a market that's actually climbing back above the 200-day moving averages and continue its trend upwards. So there's no real signal in here that can be taken out. People just kind of choose, you know, whatever kind of fits their narrative in here. But it's important to notice the much larger one, which I think has a much you know, it has a much stronger implications for the longer trend of the markets. So if we can pass above the 200-day, or even if we retreat and then climb back above it, we can continue to initiate a larger trend. But as long as we stay above this 35.47, where the 200-week rests at the moment, I think the trend continues higher. And here is just the same chart in the S&P 500 weekly, starting from 1980s, and you can see the 200-week moving average providing support every single time. And then here is where we dropped below. That was you know, back in 2001, and then the market spent, you know, a couple of years below that average. But nevertheless, you can see how many times, you know, you drop below the 200-day moving average and you climb back above it. Right, climb back, you went back below it, you went to retest it, but you never crashed. So, you know, it is a good indicator for trend, but you can't really assume that just because you drop back below it and you come back and retest it, that you're necessarily going to come into a bear market. So pay attention to the 200-week. You know, do not miss that one from your charts at any time, because that shows you what the larger trend is. All right, so let's continue to go here. I'm going to show you a little bit of the count into the S&P 500. I do not have, you know, the longer term count. Check out the last week video, but we're watching for a second wave pullback in here, right? So just a cyclical bear market in here in an ongoing bull market, in an ABCW for up in X, ABC for a second wave. Then we started with an impulse pullback in 3 waves in an ABC. Very nice into the 618 back in here. Then you start the next impulsive leg higher in a 1, 2, 3, 4, and 5. Or this third wave is still forming, and we still need a couple of subdivisions before we finish off. So there's a lot going on in this chart, and I have a few levels posted in here. First level that I'm going to draw your attention to is this X wave Y, which is X wave in here, which is at 46.36. And if the markets climb back above these levels, I think we have an all clear signal to move to new all-time highs. However, that will happen. Remember, markets go, you know, to the most obvious place in the least obvious way. So you can have a lot of structures, you can have kind of funky wave counts, things that don't look that clean, and you know, you might have a bunch of subdivisions. All the while these markets continue to climb higher, right? But for me, this trigger in here is very important, along with the 200-day moving average and the trend line. If we can climb back above the trend line, close above it, and then come back, retest it, and then shoot back up higher, that will be an indication that we're ready to move. For right now, we're still below the 200, we're below the trend line, so we got to be cautious. But the count here shows that there is a high chance that this will continue, possible a correction in a fourth wave. Where is it going to go? Well, if we're going to get a pullback that maybe started Thursday and Friday in here, right, the most obvious place will be 4,100 in the S&P 500. That will be the previous fourth wave of a lesser degree, and will also be a fib pullback between 23% and 38.2%, where a fourth wave at a larger degree would start to find support, and then from there we can climb back up higher. Anything below these levels will start to be problematic for the market. And then if you're going to attack the top of this wave one at about 39.47, then this move in here will have to be considered as a counter trend rally with a high increased chance that this market will make new lows. So very important, 4100 in the S&P 500 and then 39.47. As long as these two levels are getting respected, especially 4100, I think that there is a high chance that we can continue higher. I'm not going to tell this market where to go and what to do. I'm just going to follow the price and make my decisions based on that. So if I'm short, I want to get out at about 4100. If I want to get long, 4100 seems to be a good place with confirmation. There is tricks that we use to kind of see what that's needed for the next move up higher, and I talk about all of that into the daily videos into the program. So next, what I want to show you, it's and this is the growth versus value discussion, and I hope you stay with me here because this is pretty cool. So if you're familiar with the relative rotation graphs, that kind of shows you this asset classes and sectors and things like that. They move in a rotation manner around a benchmark. Okay, so the benchmark in here is the Dow Jones right there, and then you have Dow Jones growth, and then you have Dow Jones value. And this back in here, these are the monthly time frames, all right? And 23 months, 6 months. No, I'm going to start with the one here to the left because this is the longer time frame. So this is going back a couple of years. And if you can take a look at where growth started to peak in this market and it started to lose momentum and starting to weaken, this was back around the end of 2020, beginning of 2021 is when the markets actually started to lose interest in growth and starting to move towards value. The smart money was already sensing that this rally, it's probably not going to last, and they started to get protection in these markets. They started to notice that inflation is going to accelerate after the pandemic, and they wanted to have exposure to value stocks rather than growth stocks. They kind of smell the fact that the Federal Reserve were going to start increasing interest rates. They were looking at the bond market signals and all of those, and the rotation graphs were starting to show you that you're losing momentum, and this momentum has continued and continues into the current time where we are right now. And if you look at this chart back in here, all right, this is kind of going back to so this is January 4th, 2021, and when growth started to kind of go down. So this is the chart that kind of shows you this move, this rotation back in here. When this kind of happened, right? Like I said, in the end of December, beginning of January 2021, when we started to lose growth, then it continued, all the way back here to kind of present time where we are right now. And you can see that on the monthly time frames, value still continues to be a leading indicator, a leading preference in terms of people's holdings versus growth, right? Growth, it's lagging, and value is outperforming the benchmark. So this still continues on the monthly, even though we've had this pretty interesting rally at the moment. But since we haven't made new all-time highs, since maybe not all the stocks are participating in here, or the growth stocks, so we got to continue to pay attention to that. But if you're coming back and you're taking a look at the weekly time frames, you can see in here that value actually for the past 13-14 weeks, if you can look, this is the S&P 500, has been losing momentum, and people have been starting to move into growth, which is why we're having this strong rally at the moment, which means that those stocks are actually carrying this market higher. So we haven't gotten even into the leading quadrant, but on the weekly time frames, this thing continues to look pretty powerful. Now, on the daily, if you start to go on the daily, you can see the growth has been leading, just like, you saw back in here, but on the daily time frame has been losing a little bit of momentum. So that's why we're selling off, because these growth stocks are starting to get tempered down, and then the value starts to kind of go back into, into shape. So to kind of sum up, I don't want to spend too much time on this, but you can see longer term trends on the monthly. They're still towards value. What you want to see is you want to see this turn down, growth starts to outperform, because that's the only way I think that the markets can really rally much higher. You need those heavy growth stocks to push this market to new all-time highs, right? On the weekly time frames, they continue to look pretty good. They're going to get into the leading quadrant, but on the daily, there's going to be a little bit of a retracement from growth into value. So that's kind of what I wanted to show you regarding growth versus value. So interesting stuff. Let's go and take a look at cryptos. And this is the total market cap. It's a chart that I've showed last week, where we have this kind of massive trend line from 2015, tested a couple of times, again tested back in here with the latest sell-off that we've had, and with a little bit of a recovery trying to start into cryptos, along with the rally in the equities. Now you can notice that the rally, I mean, some of the crypto coins, some of the altcoins were able to rally pretty strongly, right? Maybe even more than the S&P 500 did, maybe much more than that, but not the whole market as a whole. We did not get such an impressive rally in crypto market cap like we've done in the NASDAQ and in the other equities. So that's a little bit concerning, because we have this, let's say a break in correlation, if I can say, just for a little bit in here. And I'm really curious how this is going to resolve. But for right now, the trend continues to be, up from the bottom left, to the upper right. We continue to trend higher. And as long as this trend line holds, and I'll show you a cool chart at the end why this trend lines are so important. If this trend line holds and we continue to push, that means that especially if we get back above $2.2 trillion in the crypto market cap, then we can get back into a much larger move higher. So now, if you can take a look at the daily time frames in here, and then I have one more chart, you can see that we're trending inside this channel. We're bouncing off this trend line. We're pretty, let's say, pretty contained in here. It's not a super aggressive, impulsive move, but it does look like you're making a higher high and a higher low, and that's what's important, and that's how uptrends kind of feed on themselves and build on themselves, and that's why it's important. And let me just kind of go back. You got to notice this trend line as well, because we got to climb back above that one to start to diminish the risk of a continuous downtrend in cryptos, right? And that's still a little bit higher, up in there around 1.4 or 1.5 trillion dollars. And then here's a look at the shorter time frame at the 12-hour, where you're making possible a wave 1 and a wave 2, and then there might be another, maybe a leading diagonal in a 1, 2, 3, 4, 5 in here, in another wave 1 and another 2. It's a pretty aggressive move. It's a pretty aggressive count, but until some of these red line levels get taken out, this could still be a pretty, interesting build up in momentum with a move much higher. So I will respect this trend line. I will respect this channel as long as it remains contained in there. And then the moment we start to lose some of these swing levels, and especially this trend line, then I think we're going to get ready for the next leg lower. So for right now, we're continuing to recover. Looks pretty good. And I posted something on Twitter that I will show you here regarding Bitcoin. Bitcoin testing, a very important area. This was yesterday. A climb back above the 50-day would be constructive. So right now, we're basically toying with this 20,700 level, which was the swing low from back here, along with the trend line. So if we can hold here, even though the sell-off looks pretty aggressive, right, and pretty strong, but remember, longer term matters, trend line matters. The fact that the market has decided that it's going to create higher highs and higher lows, right? Traders watch that, and they want that to continue. They want to go with the simple thing rather than with the hard thing. So even though you have maybe a shorter term, let's say, retracement in here against an ongoing downtrend, you have no idea, there is no way of knowing when this correction will finish off. So some of these levels have to get taken out. This trend line has to be kind of pushed to low. The prices have to go below this trend line and maybe attack these levels from back here to start to assume that, yeah, new lows are coming in Bitcoin. So for right now, we're looking like it's testing it. And I'll discuss that with the members on Monday in a little bit more detail. We have, several counts in there and kind of things, the way we look through trend lines and some other indicators in there. So now, again, just to kind of resume in terms of cryptos, a pretty encouraging move of these lows, along with the rest of the equity markets. We're getting a little bit of a correction. So if you can stabilize in equities in some kind of a fourth wave, right, and then push higher, I think Bitcoin can also stabilize and start to push to the upside. One concern that I had, and I expressed this with the members over this past week, was the fact that Bitcoin did not confirm the rally in the equities, right? And that's a little bit of a concern. Why did Bitcoin did not continue to push higher towards 26, 27, maybe even 30K with such a strong move in equities? And there's probably some underlying forces that prevent that from happening. Who knows? Maybe from the miners, maybe from people selling coins. I have no idea. But we did not get that confirmation, and that's a little bit of a concern. And this is a longer trend line kind of coming from the top that connects the B wave top up there, and we were rejected back in there as well. So it's important that we climb back above it and we regain the 50-day moving average as well in Bitcoin. But anyway, this is not this is not a video for Bitcoin. So let's continue to go. What I wanted to show you, and there you are. We're still kind of talking about Bitcoin because this is something that Peter Schiff posted, I think yesterday or a couple of days ago. And one of my members kind of brought this to my attention and showed this chart into the room. And the first thing I saw it as, I almost lost my mind. And I'm like, what in the world is he doing? So you're going to come up here and you're going to take an arithmetic chart off a coin that moves thousands of percents from the lows, right? And it swings 90% and it swings, 30%, and it's got all these wild swings. And you're going to put me an arithmetic chart with some trend lines that have absolutely no validity. And you're going to tell me that and you're getting, 3,000 replies or whatever, and then, 1,500 retweets at the moment and 6,500 likes for a bullshit chart, right? For a crime chart. That I'm so mad that when I see this stuff, because the basic of technical analysis, and if you go back into the 20s and to the 30s, and people were creating logarithmic charts because their importance regarding percentage price moves and the trend line validity when it comes to logarithmic charts. You're not going to put a line onto an arithmetic chart at this time frame. You can do it at the smaller time frames where you do not have as many swings in price, right? And where log and arithmetic kind of are almost similar. Yeah, you can do that there, but you cannot do that, especially with, not just with Bitcoin, but with any asset that moves, in such a manner, right? Are you going to put lines in the Apple chart, or Amazon chart like this? It's a complete waste of time. So in my book, this is a complete no-no. And it's he's breaking one of the basic rules of technical analysis in here, by using trend lines on an arithmetic scale. And I've just kind of went and kind of had some fun with it, and I put it into the arithmetic scale. This is what he did in here, or whoever he got it from or whatever, right? And then I just kind of took my chart and I press a button there. Sorry about that. And I pressed the button and I switch back to a logarithmic chart, and this is how the lines are. Okay, so this is exactly the validity of these lines back in here. This is what this is the garbage that this means right there. Okay, so I just kind of had to get that out of the system. All right, I hope I'm not going to get a lot of hate replies on this, but I just kind of wanted to put up there. So please, once again, use a log scale and use the proper trend lining techniques. That's all. All right, let's take a look at gold. This is the shiny metal that's trying, and this is the chart that I've showed last week on August 13. Big decline in an impulsive manner in a motive wave, and then we were talking about a wave A of the lows, and then possible either B wave pullback or a second wave pullback followed by either a C or a third, right? Both are very, very valid. We'll see what happens longer term. There is a trend line in here that's also important that kind of connects those swing highs. And then here is what happened this week. The markets quickly climbed back above that trend line, not much. Found an area of supply right there at about 1820, 1810, whatever that was. And it gave us a continuation of the roadmap that we were expecting. after a 5-wave advance of the lows, you're going to expect a 3-wave pullback. So far, the gold market was pretty responsive, and we've got a sell-off. We shorted gold a couple of times in here in the room as well. But now, I think this market can give you another chance to short it. If it does a B wave in 3 waves, then you're going to be able to enjoy a C wave sell-off. And then it's probably going to come a rally higher, either as a C wave or as a larger third. But another rejection from the trend line, which is quite important, and I do not have the moving averages in here, but I think those are maybe pretty flat in gold, if I'm not mistaken. So anyway, this roadmap continues to be very valid, and then once some of this stuff kind of gets out of the way, then we can look at the much larger trading opportunity in gold to come. Let's take a look at the dollar. Guys, the dollar is the big elephant in the room. And I've been, I've been trying to talk about the dollar. I'm a little bit in the short camp on it. It's been trying to, move higher several times. We caught some of the stops, but still, it's not giving us the larger decline that I'm expecting, not just myself, but, a lot of macro guys out there, because, you're having so large rejections from those levels. We also have, I think, a seasonality issue with the dollar as well, but this continues to push. So here is again this past week with a very, very strong move. And what this does, it creates problems in the markets, in the risk assets, right? It creates problems for Bitcoin. It creates problems for, equity markets. It creates problems for risk assets, for emerging markets. Every time the dollar rears its ugly head in here, right? All the risk assets are starting to suffer. We're losing a little bit of momentum. If you take a look at the RSI in here, right? Every single swing that we're getting, it starts to be, a little less powerful. So I'm going to continue to kind of stick to my thesis that I think the dollar is running, towards the end of this move. By what I'm seeing in the euro, and I'll show you that in a second, we might try to go past above 109, but I think it's more of a euro story than it is a dollar story in here, because European Union has its own issues, and they're not raising rates fast enough. They got a bunch of inflation. You see what happened in Great Britain, even though they're not in there anymore, but these things kind of tend to have similarities between the countries. So the dollar here continues to benefit from this interest rate differential, especially if the Federal Reserve will continue to pound, and we're going to get a 75 point increase until the next meeting in September, and maybe a 50, who knows, on the next one. But if they're going to get aggressive, expect more dollar strength in here. And it's important what they're going to say at Jackson Hole this upcoming week. So we're all going to kind of watch that very, very closely. And here is the count in the dollar. I'm still looking at it as a 5th wave. Obviously, if this makes a new high, I'm probably going to have to take this 3rd wave, push it up here, and allow for a 5th wave to continue to develop. But it's been a pretty impressive rally of these lows after what looks to be just a 3-wave decline. So the only way I could think that this could be rejected if this is some kind of an X or a B wave, and it doesn't really look that way at the moment. Still at about 161.8 multiple in there, so that's pretty good. But it's getting pretty strong in here, right? So you can see the divergence as well. And then here's what's going on in the euro. And this is my attempt to kind of count, the move from 2008 to today, so about a 14-year time frame in the euro dollar, through a decline in a wave A, then a big triangle A, B, C, D, and E, for a B wave in here, right? And that's a big triangle. Then you pull down in a C wave of a W. Then you go up in a flat in X in a 3, 3, 5 for an X. Then you drop down in A. You go up in B, and then you come lower in C. We have already passed 100% equality between C and A, and we're going to be approaching, I think, 161.8 towards this support, which is probably about 95, 96. And these are levels that we haven't seen since, obviously, 1999, 2002. And, with the latest strength in here in the dollar and the weakness in euro, it's possible that the market will try to, because there's really nothing until this demand zone in here. And here is kind of how it looks on the euro. It tried to rally just in 3 waves, an A, B, C, into the, very important trend line here that connects these highs. So for me to start to get more confidence that there is a low in euro, obviously this high has to be taken out. This trend line has to be taken out. We got to have a little bit of an impulse higher, which Euro hasn't established yet, so I don't think it's time to get long euro yet. I mean, look at the decline in the moving averages, 50, 50, 50, 50, and none of them were able to overtake it. So that would be the first signal that we're turning in this market once we get back above the 50-day moving average. Until then, sorry to say, but I think probably this 99.52 will get taken out. We'll see what happens in here. I mean, this could be an ABC X and another ABC higher, but we'll definitely monitor that. But the dollar strength, it's not a positive for the risk assets. So we'll see. I didn't count the internal of the structure. Maybe this is just going to be a quick fifth wave in here, and then we continue to recover. But I'll just continue to take my clues from the price action. All right, and then just a quick touch on the oil one more time. I think there is a fifth wave in oil in here, and with a much larger correction that's already kind of started. You can see that, and I continue to trade oil from the short side as long as we stay below the 50, and we stay now below even the 200-day moving average. The 20-day moving average also, offers resistance up. We had a little bit of a rally, I think, on Friday on oil, but the series of lower lows and lower highs, as long as that continues, that momentum can continue to push oil lower. We have broken the strand line in here. We came back and retested it a little bit. You can probably adjust it if we're going to get a rally, but for right now, there's a lot of weakness in this market, and I don't see it climbing too high. We'll take a look next week and see if we're getting back above the 200 and above the 50. Then, and we're starting to overtake the strand line in here. Then I can trade oil to the upside with more confidence. Until then, it's negative to flat in my book. So that's just a little bit of touch in oil. And since we are on energy, I wanted to talk to you a little bit about natural gas, which is trying, hardly to make new highs. I mean, it's been trying it since the spring to break this $10 level, $9.50, $10. It tried here. It tried again, was not able to sustain the momentum higher, then it crashed lower back to 550. The RSI in here with the new high, right? I mean, because you had this one back in here, you had this high, the RSI drops, you're trying to make a new high, the RSI continues to look pretty weak in here, and you're sitting now on a numerous test of this $10 level. So will the natural gas be able to continue to push higher? I'm telling you, I am short up into these levels. I'm looking for a return back towards 750, maybe 650 in here. And in terms of counts, it does look like you can have a 1, 2, 3, 4, and 5 for the completed structure, or you can have a 1, 2, 3, 4, 5, 4, and maybe 5. So I still think there's going to be a decline coming in natural gas. But this is just from a pure technical perspective. You can see the beautiful channel. You can see the upper trajectory of it. And I don't know how much power this can really have to go through that before actually correcting a little bit. So just a quick look at natural gas. And I know everybody's bullish kind of coming into the winter. And the market might have a surprise if it's not able to pass above this $10 level. There might be just a stop hunting in there really quickly, and then a crash to the downside. So we'll continue to monitor that as well with the members. All right, and then now coming to 3 charts that you do not want to miss, right? And the first one that I want to show you, I think I posted this on Twitter asking people what this is, and I didn't get a lot of responses, which is normal because it's it's hard to guess this, and it's going back right 100 years. But this is the Great Depression crash in the markets. This is the Dow Jones, and this is the big crash that we've had. The market dropped from whatever it was at about 380 in the Dow Jones all the way back to, I don't know, 20 or 30 or something like that, right? So there was almost a 90% drop into this market. And it was very swift the way it began, and then it continued to correct, and then it went down again, and then corrected, and then went down again. And this whole process took about 3 years to unfold. And, maybe, there was no Federal Reserve back then, and there was no, or maybe it was. I got to check my history on that one. But anyway, nobody stepped in to do anything about this. And, people lost lives and fortunes into this larger crash. Now, the reason I talk about this, it's not to scare anybody that this is about to happen in the markets or anything like that. It's just that every once in a while things happen. and nobody really knows exactly how crashes will unfold. But what's important to know and to notice is the importance of trends. And a buy and hold strategy works until it doesn't, and we all kind of have to recognize what happens once certain uptrends finish. Okay, and this was a big bullish market. Call it a bubble, call it whatever you want, but it continued to climb, and this trend line continued to hold it and accelerate it until one day it didn't, and then it went back below it and then came back and retested it, and this was the signal that this market is probably going to go down. Now, nobody had any idea how low it's going to go, right? But once you start the downtrend, you're in a downtrend, and that can take even 3 years, 4 years, 5 years, depending on the market. But this was one of the biggest crash in the stock market history, and it's worth some studying. When you're watching trend lines, and you got to watch them at the long time frame, to kind of make sure that things are still in place. So just a little bit of an example of what can happen once a trend gets taken out. Another chart I wanted to show you here is CGC, Canopy Growth Corporation. I think we're getting a little bit of a return back into these stocks. They have been in a downtrend for a long time, and it's the first time in here that we're noticing a pretty serious close above the 50-day moving average and almost a reversal in trend. I think, and again, just speaking about trend lines, I think if you can connect a trend line, that connects this highs that still hasn't been taken out yet. So the jury is still out, and I'm going to give this downtrend the benefit of the doubt. It's possible that we're going to return lower, but it's the first time that we're getting a serious crossover between the 20 and the 50 in Canopy Growth, and the pullbacks might get bought in here. So it's the most sizable rally that we've had since this decline started, and I think it warrants paying attention to. This could be a very simple 1 2 1 2 3 4 5 4 and 5, and then that's the first wave of the lows. Then we're going to get a second wave pullback, and then a rally much higher. So pay attention to the marijuana stocks and the spot stocks, because I think they're in the process of forming a base in here, right? So a little bit of a pullback that's going to create an inverted head and shoulder, and then if you can get back above 4.5 and 5 in here, it's probably going to be a much larger rally beginning, until you're going to hit the 200-day moving average, and there'll be some fight around there. But listen, that's kind of how they start. So pay attention. There's also a lot of volume coming into this market, right, from these lows. I mean, look at the size of these candles, and it's accelerating as we're pushing higher. So important to see. And I think this market kind of is going to start to get more interest as the weeks and months go by. And then the last chart I wanted to show you before I close off here, it's the chart of Apple. Speaking of trend lines, speaking of trends, speaking of logarithmic scales, I'm not sure if my count is super exact or not. It's a pretty tough market to kind of count in here. But, in terms of technical look, we are clear inside an uptrending channel. We're continuing to make, higher highs and higher lows in here, and Apple is very close to making new all-time highs. I think it's it's one of the single kind of growth companies in here that is so close to making 52-week highs in here, right? So I'm looking at this decline now as a fourth wave, with a possible fifth wave coming as part of a third, and maybe another fourth and another 5, another 4 and another 5, all the while we continue to be in an uptrend towards 2030 or something like that, by the way this kind of chart looks like it. So I'll continue to be bullish on this, and we got rejected from 129, and here we are in a pretty strong rally in here. Now you're probably going to get a little bit of a pullback, so I would not necessarily buy Apple right now, right? We are actually holding it into our portfolio, and we bought it a few weeks back in there before this rally kind of started to accelerate. But I would wait maybe for a little bit of a pullback, and definitely, maybe a 618 pullback, a second wave off this wave 5 to start to initiate long positions to the upside. But a very strong market, a beautiful chart in here, and this should continue to trend to the upside. And as always, guys, I really appreciate you being here. Subscribe and like. Thank you for being here every single week. We continue to grow. And the views, the membership, it's pretty fun to be part of this. And don't forget to visit me in the program if you want to trade with me. And otherwise, I'll see you on the next one. Bye bye.